Hey guys, it is Phil Brown here with Keller Williams Real Estate, and I am here today with Donna Titone from Reliance First Capital. Donna, thank you for lending your time to me today and, giving me your expertise, if you will.
Thank you, Phil. I'm looking forward to speaking with you today. Thank you for having me.
Absolutely. So what I did is just kind of, top 15 questions, what normal, even first-time home buyers, or even some people who might not know about certain things in the mortgage field. Just kind of picking your brain as the professional. So
Okay.
my first question is, do you need a great credit score to get a mortgage?
So the answer to that is no. Okay. A lot of people think, okay, I don't have perfect credit. So that takes me out of the marketplace. It doesn't allow me to get a home. My company has programs for as low as 520 as a credit score. Okay. In addition to that, I also have a credit coach that we do not charge our borrowers, our clients. We will work with you. If there's something that we need to address, we will work with you. We'll show you what you're going to need to do to improve the credit, to get you into a better program, to make you more marketable, for the going out there into the marketplace to buy a home.
I think that's really great that you guys offer a coach, just because a lot of people are super nervous about even taking that first step to speak to a mortgage person. So the fact that you guys offer that and to, help people understand where they need to fix things, that's a great tool for them.
It definitely is. And a lot of times there are credit agencies that will charge you and they don't perform anything for you. They don't help. So I've been doing this a while. I work with the credit coach and they kind of just give me like little tips of what you can do to improve your credit score. And you shouldn't feel uncomfortable. Your credit score can change very quickly. When I say very quickly, I'm talking about a month, 2 months. Sometimes it will take longer, but I've had, individuals who don't even have credit and we're able to build it and get them to the position, maybe it takes 6 months, but they're able to now be able to buy a home. So that's not something that you really need to worry about. If it takes 12 months, that's okay. At least you have a plan and we can get the credit to where it needs to be.
Exactly. I think having a plan is definitely the first step for anyone, especially if you are worried about, your credit score and whatnot. Mm-hmm. The next question that comes up a lot is, how much do you need for a down payment?
Okay. Well, a lot of people will always think 20% down, and that's not necessarily the case. We have programs, we have FHA programs with 3.5% down. We have VA programs where a lot of times you can qualify for no money down, and even as low as 3% programs. So, don't feel that you need 20% down or 25% down. We do have programs that can offer like I said, as low as 3% down.
That's great. Mm-hmm. And then kind of tying into that, the next question that we get a lot is, what are closing costs and how much should I expect them to be?
Well, you know what? A lot of people get concerned. I mean, it's very typical. The fees to close on a loan are very, I always say anywhere from 2 to 4% of whatever the loan amount is what you can expect, on top of, you're going to need homeowners insurance. You're going to have to, it depends on the taxes. You're going to have to put money into an escrow account for that as well. So you have to, if you're thinking it's going to be a certain amount, I always say have a little bit extra just in case some things that may come up.
For sure.
Yeah.
And then another great question, should I choose a fixed rate or an adjustable rate mortgage?
Well, right now we're in a situation where the rates have come up a little bit. Okay. So I will say that probably most of the mortgages right now are fixed rate, but an adjustable rate is not off the table. You can look at the benefits, how long you're going to be in the property, look at the payments versus, adjustable versus fixed. Both products serve a purpose. It's just a matter of what you feel comfortable with. I will say the rates are a little bit on the higher side, so you may be able to get a little bit of a lower rate and get more house and get into the home. The idea is to get into the home and have a very comfortable payment.
Yes.
So you feel good, and then let that start to build equity. And you can always refinance later on. The average homeowner refinances 6 times. So it's not as though you're going to be in that loan forever.
Right.
It's just your comfortability. And what I would suggest is speak with the mortgage professional, go over both scenarios and see what fits into your, into your comfortability.
Yeah, for sure. You know, whether you refinance, you definitely have to be comfortable with that original payment,
Right.
whatever it is. And then, you can always refinance. Should I lock my interest rate?
That's a good question. That's something, again, you want to speak with the mortgage professional and ask them, what's going on? What is the contract date? When are we closing? That person that you're working with hand in hand is going to be looking at what is going on. Some contracts within 30 days, some contracts within 3 months. It really depends. And you want to have a pulse on what's going on with the market. Some people they feel this is a good program, this is a good rate, I'm going to lock it. I'm good with it. It really depends on your comfortability.
Yes.
If it goes up, will you feel like the payment could change and you may be uncomfortable? So it really depends on a lot of different things, but the person that you're working with is going to definitely give you advice on what's best for your situation. It always comes down, every situation is a little different. Everybody's comfortability is a little different.
Right.
Sometimes I'll say this, you're comfortable with the payment right now. If it does go up, will you be comfortable if it's $100, $200? How do you feel about that? So maybe lock it in, because we are going to be closing relatively quickly. It's just a matter of working with the person that you're working with, the realtor, the mortgage person, so they really know, what your comfortability is and what the best is for your situation.
Absolutely. We've mentioned a few different types of mortgages so far, and again, I know the answer, but what type of mortgage is best for the client, basically?
Have to look at the overall situation. You're going to be looking at the down payment. You're going to be looking at their credit. You're going to be looking at their ratios, their income. You're going to look at the whole thing, and you're going to say, listen, this is going to be the best for your situation. If you have a larger down payment and you have great credit, you might go with a conventional mortgage. If, there's different variables that you look at, and whatever you fit into, you're always going to go with what's best for you. It could be the lowest payment, it could be the lowest rate. Like every situation, every family is a little bit different.
Yeah, for sure.
Mm-hmm.
What are discount points, and should I pay them?
Well, that's another good question. And, what you're doing is prepaying the interest. That's pretty much what you're doing. So it all comes down to payment. I find that first-time home buyers are always in a position, or most of the time, I shouldn't say always, concerned about a payment. They're used to renting, or they never had a payment. So they want to feel comfortable. So sometimes I may recommend paying some discount points to get the lowest possible rate. Sometimes some individuals may not have a lot of money for a closing. I may say, let's go with a higher rate because I can give you some credits towards some closing costs. It kind of fluctuates up and down. So people think points, it's a bad thing. It's not necessarily a bad thing. It just depends on your situation and where you want the rate to be, the payment to be. So it's definitely something to look at. It can change the dynamics of a loan. So that's what I'd say on that.
And then should I get a 15-year or a 30-term loan?
Okay. The unique thing about us is I can actually do odd terms. Not a lot of lenders can. So I have from 8 years to 30 years. So sometimes I customize payments on a refinance. Sometimes somebody may be in a 15 and they want to go longer, but they don't want to go back to a 30, but they're like, all right, let's do 18. And, I'm going to be retiring in 18 years. I want my mortgage to be done in 18 years. Can we do that? Yes, we can. So obviously, the faster you can pay a mortgage, the less interest you're going to have. Okay. So basically, any term that makes the payment comfortable is where you want to be. And like I said, I'm not cookie cutter where I'm like 15, 30, 20. And when I present this to people, they're like, I've never heard of it. I never heard of such a thing.
Yeah. And then preparing, obviously, for mortgage, what documents should one gather and have ready for you?
Well, what I'm going to say, especially in this market, is you want to be extremely prepared, meaning you want to have all your documents together, ID, all your tax returns. You want to have, your last 2 years tax returns. If you're self-employed, you want to have personal and your business returns. You want to have all your checking account, where the money's coming from. If you're purchasing a home, you want to have it kind of all together. Sometimes I'll see these people start transferring funds into different accounts. It can make it a little bit confusing. You want to have everything laid out and as organized as you can. You're going to need, if you're self-employed, like I said, you're going to need your business and personal. You want to have everything broken down. If you're a W-2 employee, you want to have your pay stubs, and these are very easy things to get nowadays, especially with technology. You can get everything like that. I have clients, they have it right on their phone. They're like, I'll just send it right over to you. We have a portal that you can upload documents, confidential, not just texting or emailing, but you just really want to have everything in a very organized space. So especially in the market right now, if you get accepted and they want to move forward, you can just send everything like that.
Awesome.
And usually if you're going to be purchasing a home, you would have already given everything to the mortgage person that is working with you. Me personally, I make sure I have everything, down payment, any kind of issues are already addressed before you go and, have an offer accepted on a property. You want to have that all in, all your ducks in a row.
Yeah, for sure. The next one is, what is the difference between a pre-qualification and a pre-approval?
Okay. So pre-qualification is kind of like, you're not really reviewing everything. You're kind of saying, okay, this looks okay. When I do a pre-approval, sometimes I send it to my underwriter. I have them look at it. I run it through the system. We look at the credit report. I have every document that we need up front reviewed, went through our system, everything reviewed. We can actually even get verification of employment. I mean, I will take it all those steps so that we know that we're ready to go. And when we have it pre-approved, it's gone through all the whole process. And all really you're looking, we just have the house that you're going to be purchasing. We'll need the title, but it makes things a lot easier when you have all that reviewed. And I strongly suggest it because I've heard a lot of stories in the past where they don't even look at anything and they just give a letter and then they go out.
Yeah.
And you know what happens from there.
Yeah. You had mentioned escrow before. What is an escrow account?
Okay, so sometimes not all loans on conventional, sometimes you don't even need to set up an escrow account. I highly recommend it because that is going to be paying your taxes. It's going to be paying your insurance. And a lot of people are not budgeted to pay it. So it gives you a very easy way. So the bank will say, okay, here's my taxes for the year. Here's my insurance. And they're going to set up an account in which the taxes and insurance will be paid. It's broken up over a 12-month period. If you're very good with budgeting money, I have found that some people like to do that on their own, but especially if you're a new homeowner, you want to be prepared and you want to make sure that your taxes and your homeowner's insurance are all getting paid with the mortgage, and you take that responsibility off your plate.
Yes, for sure. I definitely recommend an escrow account. So, why does it take so long to close a mortgage?
I will tell you, for me, myself, I can close a loan in about 2 to 3 weeks.
Okay.
On our end. Now, when you have a contract for a purchase, usually there's a date that we need to close, and sometimes there's other outside factors that may come into play. The attorney doesn't get back to us, or the seller is got some things going on. But overall, if you're working with a professional that's on your side and getting the mortgage done, you should be able to get it done within 2 or 3 weeks. So if you go with some of the bigger banks right now, sometimes they gotta get caught up with, I don't want to say the details. And I could tell you that you definitely want to work with someone that can get it done quickly and efficiently. There are many, many mortgage professionals that can get it done very quickly.
Nice.
So if somebody is running into something, let's say on a refinance, maybe there's just something going on with their credit or something that's not unclear. But usually I would say the average is 30 to 45 days.
Okay.
You definitely get it done quickly.
How is mortgage payment determined? What goes into that? What's factored in to making up their mortgage payment?
Well, you're paying some principal and you're paying some interest, and it's broken down based on the term of the loan. Okay. A lot of features, like a lot of people will say, can I prepay? Most mortgages today have no prepayment penalty. So you can always prepay on that. What I mean, like, let's say your payment's $1,000. You can pay $1,200, you can pay $1,300. You could always prepay that to pay it down sooner, and then more money will go to principal. I would say that the most popular term is 30 years, right?
Yeah.
But there's different techniques and tips, like if you make an extra payment, it'll cut some term. So you definitely want to look at, what's best for you. A lot of people are prepaying their mortgage right now.
My last question, and you've already mentioned some of the things, but what type of loan products do you guys offer?
We have VA, we have FHA, conventional. We do USDA. I don't know in your area, do you have any like rural areas up where you are?
Yeah.
I'm down here in Long Island. I don't really see it much down here. I know upstate New York, and I'm licensed in a couple of other states where there's some rural areas. Those types of programs, again, zero down in most cases. I do also have investment products. So if you are buying a property, and you want to use the rental of the property as the, figuring out the income, and you don't want to provide additional documentation, we have programs like that. We also have programs for self-employed individuals, where they may not be able to show income on their tax returns, but they can show bank statements. So we do have some other products that like that we can help, especially if they have large down payments to buy a property. We can not use the income. They have to be self-employed though.
Okay.
Yeah.
Well, thank you for taking time out of your busy Friday. Happy to share this information with my followers. They're going to love it. So again, this is Donna Titone from Reliance First Capital. Again, thank you.
Thank you, Phil.
You're
Hopefully it's been, good information to go out there.
Absolutely. I learned some stuff, so I know some other people will too.
Okay.
Have a good day, guys, and
All right.
rest of your Friday.